Hello, everyone. Thank you so much for joining us today. This is Lauren Fogelman, a business success solution, and I'm showing accounting firm owners how to be able to double their revenue working half the time. Today's topic is what accountants need to know about serving the cannabis business. And I have Raymond Guns going to have that conversation with me. And some of the things that we're going to touch on is if you want a clear view of CFO advisory in the complex highly regulated cannabis industry. Also, if you're curious about how financial strategy will help cannabis companies survive and grow, and if you would like some insights into building scalable accounting and finance systems for cannabis businesses. I suggest you have some sheets available to take notes because Raymond and we're going to really go deep into this topic so that you can really get some ideas to how that would look for you and your firm. And also, we're going to let you know how to connect with Raymond as well. A little bit about Raymond. Raymond Guns works with cannabis investors and operators to help them build finance teams and financial systems that support profitability and growth. He began his career as a CPA and eventually he transitioned into the cannabis industry, and he now focuses on accounting, GAAP compliance, tax, audit readiness, and financial strategy. Ray's worked with both national as well as international organizations, and he's known for helping companies build financial structures that can hold up in a highly regulated and often unpredictable environment. His work centers on helping cannabis businesses operate with stronger financial discipline so they can grow and remain profitable. And if you want to find out more about Raymond as well as Dope CFO, you can go to dopecfo.com. It is all there. Anyway, Raymond, I am looking forward to our conversation. Thanks so much for joining me today.
I appreciate you having me on. It was a very kind introduction of you. It was very flattering. I appreciate it. And yeah, I really enjoy your podcast. Been listening to it for a while and just trading best practices. We're all in this together. So I appreciate you having me on and hopefully we can provide some value to your listeners and our audience.
And before we get into the conversation, I'm curious about how did you actually get into really being that person that wants to help with the cannabis businesses have really strong financials?
For me, it was more of a decision of like, what industry do I want to serve? I was a little bit too young for the internet and the tech boom that happened after that, and all the e-commerce companies and software companies and fintech companies. But I'm in like the prime of my career for the growth of this cannabis industry that's didn't exist a few months ago and still doesn't exist in many parts of the world. I live in Wisconsin. We don't have any adult medical cannabis or adult use cannabis in our state. So it was really a decision by industry. I was like, oh, this is sweet. It's once in a career opportunity to be part of something it's getting built for the first time, only one time. And so we get to be a part of it. So that's kind of why I chose the cannabis industry. And then it's just the velocity of learning because it's a startup industry. And I came from a very traditional, career with, last company I worked for was 100 years old. They invented the thermostat, massive multinational. So to go from that, very, tenured, multi-generational type business and, many, many countries with many, many subsidiaries and product lines to then working with real humans and real founders and private, companies. It's been a joy and it's been very interesting. So that was kind of like what drew me to the cannabis industry is this unique industry. And then the owners and investors are a lot more interesting on the private side versus the public side.
And you're definitely on the ground floor when it comes to cannabis. And there's so many moving parts because what might be legal on September 30th could also be illegal as of October 1st. So I've seen some changes quickly happen in the industry as well. And when we first start thinking about working with early stage cannabis operators as their fractional CFO, where do you tend to begin from that financial perspective in order to really help them stabilize their business as well as set it up for growth?
Step number one for me is always setting up the accounting correctly. It's because it's everything builds upon itself. That's what makes accounting and finance so beautiful to me. It's it's very black and white, but it's also very much a philosophy. And so I love that about it, where, your accounting, your daily accounting builds weekly reports, your weekly reports build monthly reports. So step number one is just getting your arms around how are we currently doing things. If they're already an operating business, someone's accounting for the cash in and the cash out. How are we doing it? Someone's accounting for the AR and the AP. How are we doing it? Someone's updating the balance sheet at some point throughout the year. We should be doing it every month, but they get do it at some point. So step number one is just get your arms around what are they currently doing for accounting, and then get that ship righted, because you really can't do anything else without good financial reports. The financial reports are going to be the input to your budget to actual analysis. The financial reports are going to be the input to your cash flow forecast, and your whether it's 13-week or 9 months. And so, yeah, step number one is always building the foundation of accounting, and then from there you can start to do a lot of the fun, more value add stuff to the C-suite and the ownership group or the other various stakeholders of the business group.
And I know that with cannabis businesses, they actually have a lot of cash transactions. So there's some additional things that you might need to put in place for that type of business in order to protect all the cash that's flowing in and out of the business.
Yeah, no, for sure. It's a cash intensive business, especially at the retail level. It's a very much a supply chain, just like most industries, where we cultivate the initial inputs, we turn them into products, and then it kind of turns into CPG. And then those manufactured products go get sold at a retail store. And so at the retail store, though, yes, because it's federally illegal in the United States, we're not able to use a lot of like national credit cards, national banks, and so minimal debit and credit card transactions, which lends itself to a lot of ATMs and cash transactions. And so just like any good, because we're not the first cash intensive business. There's many other businesses that are cash
Mhm.
intensive. And so just like any good internal control minded, financial controller, you implement the cash controls. And so that requires, maybe a little bit more cash counts when we're closing the day or closing the week, doing more of these reconciliations between what cash do we have in the bank, what do we have in the vault, what did we ship, or not ship or get picked up. So luckily for us, we're not reinventing the wheel at all. But it does require a knowledge of, okay, what is best practice for cash controls? Okay, this is a cash intensive business unit, or part of the supply chain. Make sure we're implementing the cash controls and monitoring that each. Luckily for us, cash ties to the banks, or in theory, there's not a lot of like leeway with that one. But yes, it's a unique part of the industry where just like every industry has its nuances of the, which part of GAP or ASC impacts it more than others. This happens to be in the cannabis industry. It's cash intensive, so the cash controls tend to be more impactful. So yeah, implementing just your standard daily, weekly, monthly cash controls. If you're looking at it
And
quarterly, it's you're too far gone at that point.
and one of the things that I also think you mentioned as well was the accounting systems. So, what are some of the things that they need to do to remain compliant and audit ready without maybe adding any extra complexity to it?
Mm, that's a good question. I would say without adding any more complexity to the accounting and finance function
Mhm.
and how do you stay compliant, I would say it's being consistent with your month end close. Like that's honestly what comes to mind. It's like you got to review these numbers anyways to know if you hit your sales target or if did you operate within the operating budget. So because if you're not reviewing that, like candidly, like your competition is, and you're going to be one of the 4 out of 5 companies that fail. So if you want to be one out of the 1 out of 5 or whatever the stat is from the SBA that's still in business 5 years later, you got to review your numbers anyways and look at them and make sure that you're hitting your sales targets, you're operating within a budget. Because like we could hire a massive sales team and hit the sales target, but if our payroll gets completely out of budget, we crushed our margin. So you got to review the numbers anyways. So closing your books on a regular basis, but doing an actual full close where you update the balance sheet assets, update the balance sheet liabilities, update the balance sheet equity, actually make sure you prepare a cash flow statement. Doing that consistently helps people stay compliant. What happens is they don't do a full month end close, and then it's easy to get out of compliance because then things slip through the cracks. Um, Payments that need to be made or organizations that need to be notified, lenders that need reports, stuff like that will get through the cracks, and then you'll start sending it on a quarterly basis. But if you read the fine print, it's actually supposed to be every month by the 20th. And so that's why if you close your books every month, follow a very structured process where week one, we do this, week two, week three, okay, financial statements are closed. Now we got to give them to the lenders, get them to the equity owners, so on and so forth. That'll keep you in compliance without adding any more complexity. Like that's just the blocking and tackling of an accounting and finance team. Like you got to close the books. You should
Mm-hmm.
compare your books to something. Then you should give that to a C-suite or the stakeholders, whether it's the investors or C-suite. So that doesn't add any more complexity, but will definitely keep you compliant if you're on top of it every 4 weeks.
And then it's really sticking with the fundamentals of making sure that you have what you need so you can do that full month end close. And that ought to be able to keep it compliant, but not add to the complexity. Now, when you are advising cannabis founders, are there financial metrics or forecasting tools that you tend to rely on so that you can help them make confident decisions?
Yeah, for sure. Um, and the tools, I mean, there's dozens of them out there. I would say the biggest tools we use is the budget to actual analysis, whether it's, because it's like an actual process, but it's a deliverable, and then their cash flow forecast, like 13-week rolling cash flow forecast, 3 month, 6 month, 9 month. Those are the two biggest ones where you can actually like provide value to them of like, all right, we've now closed the books. Accounting is done. The historical accounting is
Mm-hmm.
complete. We're getting to the end of March here. So February, we've done all the accounting, but now we got to take those books and compare them to something. And so most CPAs and accountants just stop at that. And most CPAs don't even do the month end close. So they're just like, they're so far removed from like what it actually takes to run a business. They only see businesses like, what assurance work do you need? And what taxes do you need? And could I do your
Mm-hmm.
bookkeeping if that'll help me get my taxes and assurance work? And so because they focus on they even call it CAS, client accounting service. So they just stop at accounting, and that's the past. And it's super useful if you can take the past and then like forecast it into the future. That's why cars, big windshield, because finance, future view finance is more important than the tiny little rear view of accounting. So that's kind of how you help them out. The tools that you use for FP&A is usually your budget to actual analysis. Like, what's your process? How do you meet with operations? When do you talk to the sales guys? When do you talk to the ops guys? And just getting that actually, that becomes a tool. And most people don't really think of it that way. They think of it as like kind of a control, I guess. And yes, in theory, it's an internal control, but really it's a tool that you use to actually know if your business is growing or dying. And you get feedback between ops and finance when you have those conversations every month. And then the 13-week cash flow forecast. Hopefully you're not week to week on your cash position, but for some of these startups, they are. I'll just be honest.
Mm-hmm.
And so having that dialed in of like, okay, we know every 2 weeks this payment's going to hit. We have these exit of cash for payroll. Utilities get paid on this week. Rent gets paid on this week. You kind of start to really get into the weeds of the business, pun intended, of what
That
what
was
it
funny.
actually takes. Yeah, like what is the cash inflows and outflows? Because the cannabis industry does have an AR issue, especially as the companies get bigger. They're starting to deal with bigger orders. Accounts receivable, it's a known fact in the industry. It's very high, and you can have 10 to 30% bad debt where it's like we know we not want to have that less than 5% minimum, or else we're kind of just giving away our product. So that's where having that cash flow forecast is a tool that we use on the finance side every month.
So I'm curious about maybe a particular company that you were working with where before they had someone that was only doing after the fact accounting, and now they started working with you so that they can take those after the fact numbers and actually apply them strategically for business growth and business development. Any particular company that comes to mind that you've helped kind of make some transitions?
Yeah, pretty much every client we work with. That's
I,
that's why
I
they
I
come with
understand, but
us.
I'm thinking of, is there one that comes to mind for you
Yeah,
that
I'll
you
just
can
use the
give
most
an
recent
example?
example. Yeah, yes, again, it's like every client. So the most recent example is yeah, and no harm, no foul. Like accounting's still valuable. It's the foundation. We can't do
Mm-hmm.
anything else. But it's just the nature of, I guess, skills and experience. Like so if you only learned accounting, you're just gonna stop there. Whereas if you only learn finance, you can't even connect the dots until accounting does their job. So you're also kind of useless. So it's like having that gap between accounting and finance and knowing how that works, which is kind of like what the financial controllers do. That's like pretty useful. But anyway, so long story short, um, yeah, they just had accounting, so they knew what their payroll was, but they didn't really know what their cash flows were and their payroll compared to the sales, compared to the cash flow. Like what can they actually spend money on? What is their operating capital? Like how much does it cost to run this business each month? So once we were able to implement, and it's all data that's there, it just
Mm-hmm.
hasn't been presented in a logical way. And so, accounting accounts for it, but they don't do anything with it. And so that's where finance picks up the accounting data. We recreate it, we compare it to things, we create derive analysis from it, trends, insights, we speak with operations, and then we present it up to the business units to make decisions. But yeah, once they knew what their operating capital was, they knew how much money is tied up in the business. Now they can start to be like, okay, minimum I need to sell this amount. So they were able to now like hold their sales team to an actual, like to your point, a KPI that ties directly to the financial statements. And so it's like, all right, we need to at least make this amount of money per month to cover payroll, rent, utilities, all the other operating expenses. So then they can kind of have weekly KPIs from there. And they know how much sales they need to make. And then payroll, we were able to look at their payroll and then like, because I can see where the bottleneck is. It's like, hey, sales are starting to go good, but our inventory is starting to grow. We have one sale that's working, like with one, unit or one like campaign, but we need to get this other inventory moved. And so there was a bottleneck with like packaging or something. And so look at the cash flows, look at the payroll. What can the business actually support in its operating budget? Insight, cool, hire this person, relieve that bottleneck, take this person back over there. And so, yeah, now their inventory is back to where it should be. Sales are steadily growing. So that's the kind of insight where it's like accounting can tell you what the expenses are and after they've been paid. But until you start to analyze it and compare it to the future, and start
Mm-hmm.
to figure out how we can drive profit, that's where the value starts. So that's like the most recent example. And again, it's because it's the most recent client. That's
And,
usually
and
why we
I
get brought on.
and I think when you're talking about these companies, there's always going to be a bottleneck somewhere.
Yeah,
So really looking for that
every
bottleneck,
time.
identifying it, relieving it, and then you move on to the next one, the next. It's an ongoing process, actually.
It's
But
awesome. Yeah. And it never ends.
yeah, it's definitely never ending, and it makes such a big difference. The other thing that it brings to mind for me is the challenges from a tax perspective because the 280E, and as a result of that, people don't always think about it, but they could be at a tax rate over 70%. So, is there something that you do to help them with structuring their operations so that they can remain compliant, but also just be able to be as profitable and reduce audit risk?
Yeah, yeah, for sure. 280 is a real thing. Depending on who you ask, it impacts the industry more or less. But it's very much impactful. Like you can't get away from it. Um, but yes, I would say like without getting too technical, but I mean I know this is more like an accounting CPA podcast, but essentially most small companies run on the cash basis, and they're just for better or for worse, they're not really required to be on the accrual basis. And so they don't really worry about closing their books because they're not going to accrue in these expenses and calculate this, accumulated depreciation and interest liability. They leave that to the accountants during tax time. But if you actually like keep your books up to date on a GAAP basis, you can start to allocate a lot of these costs into inventory that are associated with manufacturing products or producing products. And so as long as it's like production and manufacturing costs, if we do the correct accrual based bookkeeping, keep the books on the accrual basis, we're able to allocate a lot of these expenses into the inventory because even though it's an overhead expense, it's actually related to the production and manufacturing of inventory. So that's kind of where we come in. And then candidly, just keeping straight books and records. Like, yes, we
Mhm.
have like little cannabis accounting tips and tricks and best practices from serving the industry. That is very, trust me, it is bespoke to the cannabis industry. But what I've seen is like this, the CPA in me is like, well, a lot of you guys aren't even doing the bare minimum of just like, even if you were just a small business outside of cannabis, you're not even keeping your books and records straight enough to like have the best tax position or to even have a tax strategy. And I think that's something I had to learn working with startups, small business owners. I came from Wall Street. It's like, huh, well, of course, every one of our
Mhm.
subsidiaries is completely buttoned up and they have financial reporting. And the beauty of that is they just fire them if they don't do it. Whereas, like when you have a small business owner, you can't fire them if they don't get their reports in on time. They own the business. And like
Mhm.
these businesses do tens of millions of dollars a year in revenue. And so I always I had to relearn almost of like, wait, so you guys don't just do this because that's what you do? And it's like, no, we don't really have a reason. Whereas like where I came from, week one, we started the month end close. Week two, we were finalizing everything to get the reports out. Week three, we were very much finalizing the reports. And then like week four, I think they had to go out, we had to file our 10Ks and our 10Qs with the public for the prior month. And it just happened like clockwork, where privately held companies don't have that. And so they can kind of just do whatever they want. So that's why I kind of I'm rambling a little bit. I lost track of like the original question, but essentially 280E is still very impactful. And so because they do whatever they want, they just miss a lot of tax strategy that they should be aware of. And then candidly, 280E is going away. And so that's another unique thing where all these business owners just neglected deductions and credits. They're like, well, I'm 280s, no deductions, no credits if you follow the letter of the law. But now once 280E goes away, if it does, Schedule 3 happens, goes from Schedule 1 to Schedule 3, then they're able to take advantage of all of these like normal businesses, and tax strategy is going to become even more important than it already has. But yeah, so to summarize, there's definitely ways that we address the effective tax strategy. And yes, it's through entity structuring, accounting, and then also just big picture understanding of the industry. But I would argue that's the same if you were serving purely oil and gas companies or purely media entertainment
Mhm.
companies. Every industry has tax advantages. You just got to know where to look. And that's why we are like big on niche industry, focus on one industry, actually become an expert, because you just provide way more value than you can charge higher fees. But anyways, that's all I have to say on that.
And really what I'm hearing is because the fact that you are focused on the cannabis industry, you know some nuances, some things that are happening, you're aware of trends, you're aware of changes going on in the industry so that you can give your clients the best advantage possible. And I think that goes right into the advisor that you do, is that you're really not just looking at things after the fact or realize, helping them just get less messy with their accounting and their cash flow, but you're approaching this from that CFO role. And as a result of that, you're probably bringing some strategic guidance as opposed to just the financial reporting. So anything as far as that CFO advisory role that you bring that really helps to elevate a business.
Yeah, no, good question. The way I kind of think about it is the first two things that came to mind are guardrails and capital. Because accounting is accounting, finance is finance. Like, yes, in finance, we can draw insights and do trend analysis, but your blocking and tackling is going to be a budget to actual. Like, you do need to actually know how to forecast accurately a bit. But once you have that dialed in, it's pretty straightforward. And so finance is finance, accounting is accounting. But once you get more into like that advisory work, that's where it's a little bit, there's a little bit more gray area. And so, and you're more tasked with managing the capital. And by that, I mean turning your investors' capital into more capital. It's all about positive ROI. And so, once you get to that CFO advisory, the way that I think through it is it's for sure it's capital focused. Like
Mhm.
accounting and finance is the base, and you really can't raise capital unless you can pass due diligence. So if you've been operating for a number of years, no one's going to lend you money if you can't give them financial statements that are GAAP compliant. Income statement flows into balance sheet, flows into cash flow. Here's the other year's tax returns. You can see how they tie perfectly. Here's the support for the assets, support for the liability, support for the equity. Like if you can't do that in a few days, it's gonna really hurt your ability to like raise capital, set up lines of credit, get good interest rates for equipment, buildings, working capital. There's so many reasons we need capital in this industry. So that's kind of what I really think of as the CFO, because like finance and accounting is more the financial controller level work where yes, you have an accounting manager, yes, you have a finance manager, that rolls up to the controller rolls up to the CFO. And so the CFO is not really involved in the day-to-day accounting, and honestly, they don't really go talk to the sales team and be like, "Why didn't we hit our numbers?" Like we do all the analysis, and then we give it to them, who give it to the CFO. Then they have to look at why we didn't hit our numbers, and then go talk to the CEO or the investors or the board. But with that all in mind, you got to know where your guardrails are. And so, like as like the advisory services, like especially on the tax side, you got to be aggressive. Like you can't just sit on the sidelines and be like, "What's the most conservative tax strategy we can find?" If you're just spitting off money and you just don't care, then And your owners, that's their risk appetite, of course, meet your ownership group where they're at or their board. But in our experience in startup land with startup risky small businesses, they they're pretty they're okay with risk. And so they want an
Mm-hmm.
aggressive tax strategy. And so and I used to be a CPA, still active license, but I'll see tax CPAs on stage disagree. And I love it as the CFO. I'm like, perfect. You're both supposed to be the experts. You both disagree. Same with the tax attorneys. Oh, you both disagree on how to handle this. Perfect. That means I know where the guardrails are. They're somewhere between this guy's argument and this girl's argument. And so once you know where the guardrails are, you can play to your advantage. And so when I put on my CFO hat, now that I know where the guardrails are, my job is just again, drive profit, drive value of the company, expand the value of the company. And so then you use the guardrails to do that. And so that's kind of how I think through the CFO advisory. Like you got to be able to manage capital at that point, and it's easier said than done. And it's not just raising capital; it's like being able to forecast again into the future. What are going to be our future capital needs? Okay, how much do we need, and by when in the future? Let's work backwards and speak to the various sources of capital to make sure we get the capital, at a price that allows the project or the expansion or the investment to be profitable. So that's kind of how you start to think at the
Mm-hmm.
advisory level, and that's kind of how I think through that.
So thinking about that is really about knowing the guardrails and what's at both ends of the spectrum with the conservative as opposed to the higher risk, because we're talking about the cannabis industry overall. The people going into this industry tend to be uh, more of kind of like Robin Hood. They're more they're forging the path forward because things are
Yeah.
constantly changing. It's not legal in every state. They're not quite as risk adverse. And as a result of that, you are tending to, from that CFO role, give them insights so that they can make strategic business decisions moving forward and also have more capital available to them. Does that sound about right?
Yep, yep. I always kind of joke. It's like it's a risky industry. Like they're gonna find ways to break the laws anyways. So like we kind of pull them back in, be like, no, don't do that. That's too aggressive. This is where the line is or the guardrail. Um, So yeah, no, then I think that's kind of a fun thing of startup industry. I imagine it was similar in the tech industry. Like you have a lot of young founders and capital is coming and we're trying to figure
Mm-hmm.
this out in real time and also educate the public, but also build regulation as we build this in real time. Like I remember when you used to have to go inside a bank and like online banking was scary and like now everybody does online banking.
Mm-hmm.
So it's like same thing. Got to educate the consumers, get people educated with it, get banks comfortable with it, get businesses comfortable with it. So yeah, it's very interesting.
I want to talk about some of the blind spots regarding the cannabis industry. So,
Yeah.
what are some of the things maybe that you're looking at and possibly even helping them reposition on in order to look at pricing compression, regulatory friction, limited banking access? What are some of the blind spots that they need to be aware of?
Mm, I'm biased because I'm on the finance side, so I normally just see all the blind spots from like the finance team's
Mm-hmm.
perspective. But I would say it's like knowing true cost of operations. It's capital intensive, and so you can look at how much did we sell, how much was the cost of those, well, what was our gross margin, and even operating some of these businesses, a lot, sometimes it doesn't take that much to operate them. A lot of those costs are, direct labor in the cost of the product. And so you really need to get down to your, net profit after tax, like to really understand, like, okay, A, just how profitable are we? And then the unit economics. I would say that's kind of another one where you can kind of know who's really a dialed in business or owner operator if they can tell you confidently, like, yeah, we're at about 0.85 cost per gram, or I can land these units in Europe at about €1.50 per gram. And so once they get to that like per gram unit economics, that's kind of when you know they're solids. But a lot of people can't do that. So I would say that's like a blind spot. And I would also say just the need of capital in the industry. Like everybody knows it's capital intensive, but they kind of forgot it for some reason. And candidly, it was very easy to raise capital for a number of years, and people took advantage of it. And it was fairly easy to get like put on the Canadian Stock Exchange and to be, quote unquote, publicly traded company. And
Mm-hmm.
so people took advantage of that. And then, capital kind of dried up the last few years. It's like over a 50% reduction on some estimates, which would be, very catastrophic to most industries. And it was to the cannabis industry. So people kind of forgot how capital intensive it is. And so blind spot of like most of your businesses are like undercapitalized. But long story short, if you do want to be remaining a going concern and expand, it's going to need capital and you got to clean up your books. So kind of like without going into a whole spiel of like, you got to have good accounting, books and records, close your books each month. That's what we do. But like that's a blind spot. That's honestly why like we like focus on it so much because it's like so core to getting capital. And so because capital is so useful and everybody focuses on capital, but the blind spot is actually their books and records are a mess and they couldn't actually pass due diligence. So I don't know. I would say those are kind of the blind spots. And then accounts receivable, aging, and bad debt. That'd be my third one. Then I'll get off my high horse. But there's tons of things we can do on the front end to make sure our bad debts don't exceed 5% or 10%. Whereas in the cannabis industry, there's some estimates of bad debt as high as 20 to 30%,
Mm-hmm.
which is terrible. And I get it. There's not a lot of repercussions because like some of these are still federally illegal. So there's not these, normal repercussions, but there's much more, internal controls on the front end of vetting the customer, starting small with the customer and only getting up to full orders over time, to mitigate some of this AR bad debt expense we're seeing. So I don't know. I'd say those are kind of the blind
And
spots.
it's a reality for the cannabis industry is the bad debt part of it, because of the industry and the nature of it. So it's know your per gram unit, be able to mitigate bad debt as much as possible, and then closing your books at the end of the month so that you have really clean financials. So those are some of the things that help to reduce the blind spot. And the other thing is because things are constantly changing, as well as what's going to be required, what's going to be legal one day, not legal the next day. As because that I see a lot of operators looking at going international and expanding into the UK, into the EU as a result of that. So any financial risks that or considerations maybe that you would help cannabis business evaluate before they start to expand into another country and become international?
Mm, it's not that common yet, just because in the States we're still federally illegal, so we don't do a lot of importing and exporting. But I would say it's the same process of going from California to opening up offices in New York. Essentially, you're trying to expand to a new market. Having come from international business, it's kind of the same when you're expanding to a new country. It's a new market. And so the biggest thing is just again, just analyzing the A/B analysis of the uses of capital. Like we have very limited resources of time, capital, and people. And so we got to allocate them and put them to work in the most logical way that produces the largest return in the most acceptable time frame. And so initially it's just like an analysis, like how much capital do you think it will cost to get your products from California to New York or from the United States to Canada or from Canada to Europe, regardless of where the import export is going, how much is it going to cost us? And then how much money do you think we can make from it and what's the time frame? And then with those three data points of cost, potential sales, revenue and time, we can kind of back into if it's the best use of capital. So again, I just oversimplify everything because I feel like there's too many people like making things too complicated and like they get like exalted for it. And I'm like, I don't think that's like Einstein was the one guy who said like if you really understand something, you can explain it to a fifth grader. So I kind
Mm-hmm.
of think about the same way of like complex problems. It's like, well, let's just think about it from like what's the most important, no more than three things, but ideally like one thing. And so yeah, so thinking about going to new markets, what's it going to cost us? How much can we make? As a CPA, I always, attach compliance. It's like, hey, because that's going to impact cost. And so like, yes, get this specific product at this specific standard in this specific market through this specific supply channel, you know, what is the cost of that? And it's usually, higher compliance, higher standards is going to be a higher cost. And so again, just factoring everything into the cost because that's like what really forces you when you really try to factor in everything into the cost. It forces you to analyze your partners, What's the split going to be? What is it going to cost to work with them? What's the exchange rate of going to new markets? And so by sitting with the cost, you can really start to understand operations. And that's what I love about finance is like it's not on an island. Everything that operations does, selling products and making products and joint ventures, it all involves money and feeds back to finance. And so that's what I would say about kind of thinking about new markets and expanding to new markets of like first sit with the cost because that's going to force you to actually analyze everything in the
Mhm.
supply chain and every player and every relationship you're going to need to make. And then after you sit with the cost, sit with the sales because that'll also force you like, okay, we used to be able to market it this way in this market, but now we have to advertise it this specific way, which like could lower the sale through velocity, so on and so forth. And like sitting with those two data points and factoring everything in, which like seems kind of nerdy, but like that's business at the end of the day. That's how you analyze, if expanding to this market versus that market makes sense and all things considered, what would be best use of our investors' capital.
So the three factors I hear, which are the fundamentals, are looking at the cost, which is the primary. If we were looking at a delta, would be at the top of the delta. And then the two bottom points would be the profit margins and the time frame of how long would it take to get this operational, to get a return on the investment, and to see profits start coming in. So, Ray, we've covered a lot of different areas as far as the financials, the CFO side, regarding cannabis operations. Really learn from you every single time that we get together. Some of the things that we touched on is that clear view of CFO advisory in this highly regulated cannabis industry, how to be able to maybe help cannabis companies survive and grow, and also some of the insights into scaling accounting and finance systems for cannabis businesses. So, Ray, if somebody wanted to follow up and connect with you and find out more about what you're doing and Dope CFO, what's the best way for them to do that?
I'm a modern man, so I'm on the internet. You can Google me, Raymond at dopecfo.com. I'm active on LinkedIn. That's been kind of a fun thing I started 2 or 3 years ago. So pretty easy to find. And despite like getting into the weeds a little bit on this one, like I try to keep things very high level and I'm always willing to talk to anybody, anybody who's interested in business, operations, people, just because I'm learning the whole time, but also, I learn best practices. We can, work with each other potentially. So yeah, Google me. And then I'll be traveling around. I again focus on the cannabis industry specifically. So I'll be at some of the conferences here across the pond. And then I think I'll be at AICPA Engage in Vegas. So I'll be around between the different expos and conferences, trying to stay sharp, stay on top of my game.
Absolutely. Thank you so much for the engaging conversation. And this is Lauren Fogelman with Business Success Solution, showing accounting firm owners how to be able to double their revenue working half the time.